What's good, family? We're back again with another episode of Tax-Free Living, where I teach entrepreneurs just like you how to live tax-free. And today we have an amazing episode. I'm going to teach you all how to never get audited. Yes, I'm going to teach you all how to never get audited in this episode, because a lot of you all have been reaching out saying you're scared of audits. How can I avoid audits? Like, what do I have to do to prepare for audit? I'm gonna give you all the gems on how to never get audited. But before we get into this amazing episode, if you've been liking this content, if you've been liking the channel, if you've been liking the tax gems, please like this video, subscribe to the channel, and share it with a friend. Okay? The more people we can help, the better. Okay? This is going to be an amazing topic because you all have been asking me for this, and this is going to be revolutionary information, right? It's going to teach you all how to put yourself in the best position to avoid audits. And I actually have 10 steps, okay? I'm going to give you all 10 steps to avoid getting audited. So without further ado, let's get right through the 10 because we have quite a few things to cover. Step number 1 is to file your tax return on time, right? Right now, we're in the midst of tax season. And I know a lot of you all might be behind. A lot of you all might not have your paperwork together. And what tends to happen is people tend to just bury their head in the sand and hope that their tax filing problems go away, right? Now, that's not gonna happen. So if you want to lower your chances of getting audited, you want to file your taxes on time. You don't want your tax return coming in by itself. You want your tax return coming in with millions of other people's tax returns to go through the computer system and just, fall in line with everybody else and lessen the chances of getting audited. When you file your taxes after the tax deadline, even if you file an extension, you are increasing your chances of getting audited. So you want to file your taxes on time. And here's the thing, y'all. Here's the thing about not filing your taxes on time. The penalty for not filing is actually worse than the penalty for not paying. So even if you can't afford to pay your tax bill, still file your tax return on time. So that's step number 1 to lessen your chances of getting audited. Step number 2 is to beware of industry averages, okay? Beware of industry averages. So Carter, what do you mean by beware of industry averages? So when you incorporate your LLC or your S Corp or your C Corp, whatever your business entity is, you're gonna be asked what type of business do you run? So whether it's a photography business, a construction business, a marketing business, an accounting firm, you're gonna be asked the type of business that you have. And each type of business has a specific NCIS code based on the business's industry. Okay, based on the business industry. So if you have a construction company, you're gonna have a different NCIS code than you would if you had an accounting firm, okay? Now, why does this matter? Because the IRS computer system has baked in industry averages for your expenses. For instance, if you're a construction company, so whether it comes to equipment and machinery, they're gonna expect you to have high equipment expenses because the industry averages is to have high equipment expenses. On the other hand, if you have an accounting firm, the IRS tax system is not gonna expect you to have equipment expenses in the hundreds of thousands of dollars, because accounting firm, all you need is a couple computers, staff, and some software. That's about it. So if I have an accounting firm and I have really, really high equipment expenses, it's gonna increase my chances of an audit because the expenses don't match my industry average. So you wanna make sure, based on your industry, that your expense line items make sense for the industry, AKA the NCIS code that you're in. You just wanna make sure before you file your taxes, review your expense line items and make sure that they make sense for your industry. This will also help decrease your chances of an audit, okay? So step number 3, all right? Step number 3 is you want to attach the proper statements and forms to your tax return. Now, this is not so much as your job as it is your accountant's job. If you file your own taxes, this is your job, which is a problem, okay? Hear me out. If you are filing your own taxes, you're gonna cost yourself more in mistakes than it would cost you to to hire a professional, okay? You're gonna cost yourself more mistakes than it costs to hire a professional. So hire a professional, so this is their job. You just wanna make sure if you have a Schedule C, you wanna make sure all the proper attachments is with your schedule. If you're depreciating a vehicle, you wanna make sure that your depreciation schedule, I think it's 4562, is attached to your tax return. So make sure all your forms are attached to your tax return, and this is more of your CPA's job than it is your job. But still, that's gonna decrease your chances of an audit. Step number 4 is very important. This is one of the easiest ways to decrease your chances of being audited, okay? So here's the play. S Corps have a 1,500% less chance of being audited than an LLC. Ooh, this is good, y'all. This is good. I'm gonna say this again for the people in the back. S Corps have a 1,500% less likelihood of getting audited than an LLC. Why? Because LLCs are filed on a Schedule C. LLCs and sole proprietors have a higher likelihood of being audited because the IRS knows that if somebody has an S Corp, that they more than likely understand more about taxes than the average Joe, because most people don't even know that S Corps exist or why they should have an S Corp in the first place. So if you have an S Corp, the IRS knows that you know more about taxes or you have the proper tax representation. So due to that fact, they're gonna say, hey, S Corps are more serious business owners. If they have an S Corp, they most likely have an accounting team. If they have an accounting team, they most likely have their paperwork in order. So we're not gonna waste our limited IRS audit resources on people that have their stuff together. So due to that fact, they leave S Corp owners alone for the most part. So now, simply by upgrading your entity from a LLC to an S Corp, you're gonna decrease your chances of audits by 1,500%. This is one of the easiest ways, guys. One of the easiest ways to decrease your chances of an audit. Step 5 is probably one of the most common things I see business owners miss, and that is issuing your 1099s on time. If you have contractors, it is an absolute must that you issue 1099 reports prior to January 31st, okay? If you have high contractor expense on your profit and loss statement, but no 1099s, that's one of the easiest ways to get audited. Because think about this, the IRS needs to know who you paid so they can get the money from them, right? If you paid somebody $50,000 as a contractor, they didn't pay taxes on that money. The IRS needs to know that they made the money so the IRS can bill them and get the tax money from them since they're not getting the tax money from you. So step number 5 is to issue 1099s on time. Now, step number 6 is just as important as step number 5, and that is issuing your payroll reports, AKA your W-2s, on time. Now, W-2s and 1099s are both required to be filed by January 31st of each tax year. But the good news for you is that if you're using a payroll software provider like Gusto, like ADP, they file the W-2 or payroll reports for you. So they make your life easier by filing the reports for you. So if you're using a payroll software, guess what? You ain't gotta worry about nothing. You ain't worry about nothing. You ain't gotta worry about nothing, right? So make sure you're using a proper payroll software so that the payroll software can file the 1099s reports for you. So that's step number 6, issue payroll reports on time. Step number 7, guys. You ready? Step number 7, lucky number 7. If you don't do this, you will be unlucky. Okay? If you don't heed to step number 7, you're gonna be unlucky and you're most likely gonna get audited every single year you do this. Oh, this just makes me cringe when I see this, okay? So step number 7, guys, is to avoid round numbers. Avoid round numbers. One of the most frustrating things to see on a tax return is when people have expenses all ending in 0. So you mean to tell me your meal expense was exactly $1,000? You mean to tell me that your software expense was exactly $2,000? You mean to tell me that your travel expense was exactly $10,000? Like, how many times can numbers end in 0? Right? How many times can numbers win in 0? I reviewed a tax return a few weeks ago and it made me cringe. Every single expense line item ended in 0. You don't think that the IRS is gonna think something's fishy about every single expense ending in 0? So guys, please, like if you review your tax return by your CPA, your tax preparer, and every expense is ending in 0, tell them to change it and to not file it. Do not round up. This is not your 8th grade math class telling you to round up and round down. No, avoid round numbers. Like make it end in 7, make it end in 5, make it end in 2, make it end in 1, make it end in 8. Like your expenses should not end in round numbers, because the IRS computer system is gonna pull this return like, yo, there ain't no way that every number is ending in 0. So please avoid round numbers if you wanna decrease your chances of being audited. Now, let's move on to step number 8, guys. Step number 7 was important, but step number 8 is also important. So here's what I want you to know. The home office deduction is no longer a red flag. Okay, we talked about this in the previous episode. The home office deduction used to be a red flag, but now, due to COVID and due to the way the world is working now, majority of business owners work from home or have some type of home office. So the home office deduction is nothing to be worried about. But with that being said, we do not want to inflate the home office deduction. If you're taking this deduction, make sure that you're taking this properly, that you're running the measurements, and that you're doing it with proper calculated math. Now, step number 9 is in relation to step number 8. So step number 9 on how to avoid audits: if you have an S corporation, do not put home office expense on your S corp tax return. Okay, this is one of the easiest ways to get audited. Why? Because an S corp is an entity. An S corp is not a person. And due to the fact that the S corp is an entity, is not a person, an S corp can't have a home. Now, if you have an LLC, obviously the LLC is a business owner. The business owner can have a home. That's fine. But an S corp is not seen the same way as an LLC. So an S corp can't have a home. So we do not want to have home office expense on our 1120S S corp tax return. So instead of having home office, you're just going to have a rent expense line item on your S corp 1120S tax return, because the S corp is going to reimburse the homeowner for the home office deduction, aka taking it as a rent expense and not a home office expense. So now we can still take the home office deduction as an S corporation, but we need to record it as rent expense on our 1120S tax return to avoid the potentiality or triggering an audit. Is this good, guys, or is it good? Because we got one more left. So here's what I want you to do. If this has been good, before I reveal number 10, if this has been good, please like, please subscribe, please share this video with somebody else. We are breaking generational curses when it comes to understanding taxes and how to keep the money, not just focus on making the money, but how to keep the money as well, because millionaires avoid paying taxes all the time. And now it's our turn to start learning and implementing these strategies so that we can live tax-free in 2023 and every year thereafter. So step number 10 to avoid audits and decrease your chances of being audited is do not avoid IRS tax letters. I know when you get an IRS letter in the mail, it seems scary. You want to tuck it away and look away, but no, that is just gonna make things worse. When we get an IRS letter, we want to review the letter, we want to send it to our CPA, we want to respond on time. Think of the IRS as your girlfriend. If they reach out and you don't respond, they're gonna assume the worst. Okay, so you don't want that happening to you. When you get an IRS letter, respond to it quickly and take care of whatever needs to be taken care of, but do not ignore it. Okay, so those are the 10 steps. The 10 steps to avoid getting audited. Again, if you like this video, like, subscribe, share, tell a friend, and we'll see you all next time. Peace.